Stock slip after a steady start ahead of the FNO expiry amid slim overseas queues with markets shut in the US for Thanksgiving. IT and auto are the big drags even as utilities and energy eke out minor gains.
Godrej Properties floats a 6,000 crore rupee QIP priced at a significant discount, joining its peers in beefing up coffers for growth. The realty major has a launch pipeline of 30,000 crore rupees for FY25.
Moody's upgrades the credit rating of Vedanta's parent Vedanta Resources on the back of a successful liability management program and growing investor confidence in the group. The stock perks up on the Q.
Putco signs up NBCC to develop its 10-acre land parcel in Noida. Natco Pharma nets 116 crore rupees for over 14 crores of unused land, while Borosil transfers tenancy rights in Worli for over 13 crores. You're watching us here on Halftime Report this afternoon, where the markets are sharply lower, down 800 points. The Nifty down 220 points. 800 points was lower for the Sensex. The Nifty banked out about 225 points as well. The green line is that the mid-caps are doing well. Advanced decline is still holding up. And we do have a bunch of stocks in the small cap and also which are doing extremely well. I'm Mangla Malu, with me Hormaz Fatakia. Hormaz, it's befitting that, a series like November, which had a near 1250 point range, has seen this sort of volatility on expiry day.
It's as dramatic as the entire series has been. It is only apt, as you said, right, that the end of the series has to be equally dramatic. And we were going all and sundry until 10:30 in the morning when this all of a sudden this dip that came in on the Nifty, and we've been lower ever since. Now fighting to hold that 24,000 mark on the downside is the Nifty, and it will be that key level to watch out for ahead of the FNO expiry. At the start of the session, we were up 70 points for the series, but now looking at this, it looks like it might just be another negative series after the 2,000 point drop in October.
We still have half a day of trade left, but what's interesting is that typically on days that the US markets are shut, there are some volatile moves that we see on our markets because of thin volumes. One, secondly, there is a case of fair amount of, a news piece that comes in, and market typically overreacts to that again because of thin volumes, etc. We need to find out whether, the decline that we are having in our markets has some basis when it comes to news itself or not. Because if there are fears of any sort of international conflicts, then the first thing that happens is crude spikes up. But crude has anything but spiked up. It's still holding at around that 72.5, closer to 73 levels itself. The other thing that we see is a weakness in the rupee, or perhaps strength in gold, which is all usually seen as safe asset buying or markets seeking some sort of safety. None of that has happened. So the question once again is that, is this just expiry related? Because at lower levels, 24,000, 2450, we are seeing some sort of recovery from the lows as well.
Indeed, we keep an eye out on these moves on the index, especially considering it is expiry in today's session. So 24,000, the key to watch out for on the Nifty. But of course, there are plenty of movers within the broader markets. As Manglam just said, the mid-caps are doing well for themselves so far, at least on paper, compared to the broader market. For the benchmark indices, one of them is Paytm, and that is up and about in today's session after UBS gave it a neutral rating. But the bigger takeaway is that it raised its price target to 1,000 rupees from 490 earlier. Abhishek is joining in to tell us more on that. Abhishek.
Well, UBS missed the upside that Paytm stock has had from the lows, and that is why now they have increased the target price, saying that all the positives are factored into the stock price. So UBS has again written on Paytm neutral rating. Target price increased to 1,000 from 490. They said that significant improvement that they have seen in the fundamentals of Paytm is now priced into the stock price. So most regulatory issues have been resolved. Business performance going ahead will be the key driver of the re-rating of the stock. So they are saying that Paytm is regaining, which will be an important factor with respect to customers. Monthly transaction users are down 30% versus the MTU that was there pre-RBI ban over there. Digital payment market share that needs to improve. It is now down to 18.5% from 24% that it was previous to RBI's action on Paytm. So its net payment margins are ahead of their own estimates. Adjusted EBITDA break-even is likely to happen in Q4 of FY25, and they believe that FY26 revenue will be in line with FY24 revenue at close to rupees 9,900 crores. Back to you.
All right, we take that point. Thank you, Abhishek, for that. Paytm up around 2.5% in an otherwise wobbly market. What's actually doing a lot better is a couple of these electronics retailers. So we have Electronics Mart India. The intraday comes up for you up around 4%. It's done well, even though it's corrected about 30% from its 52-week high in the last 12 months. We've seen decent traction on that stock. Alongside that, we have Aditya Vision as well, which is holding up with gains of almost 4% odd. Remember, this has been a big mover from the SME board all the way up to the main board, and in the last 12 months we've seen a big move out there as well. What is it that the street likes about this? Well, this morning there was a note that came in from Nuvama, the Australian Edelweiss, where they've initiated coverage on both these stocks with a buy and a target price which is suggesting around 36-37% upside for both the counters. So let's take a look at Electronics Mart India. Their target price on the stock is 237. What their thesis is the store that they have, which is Bajaj Electronics, is a strong market leader in Telangana, and very recently they've expanded their business into the NCR about 8 or 9 quarters ago itself. Usually that is a very cutthroat market, but the robust cash flow that will come in from Telangana will support their expansion into NCR, and NCR is important because it's the largest consumer electronics market in the country itself. So as a result of which, over the next 3 years, they expect 21% revenue CAGR, some margin dilution, which means the EBITDA compounds at 20%, net profit compounding at 18% itself. But they are addressing a much bigger market, so that's a positive. Aditya Vision, on the other hand, a similar business model, but totally different geography. They have two big models which are working for them. One, the rising electronics penetration in tier 2 and beyond itself. And Aditya Vision has been quite a successful player in Bihar. So the belief is that maybe this successful model can be replicated in all other Hindi heartland states itself. And with rising penetration, maybe that macro trend helps them too. So there, the expectations are a lot more in terms of revenue CAGR, 28%, EBITDA grows a lot faster, 30%, and as a result of which the net profit compounds at over 41%. They have a target price of 672. That stock moving around too.
Both of the stocks doing well in an otherwise wobbly market. Manglam, thanks for that, but we're not letting you off so easily because it's time for Insight Edge as well. And Tilaknagar Industries is the stock that is buzzing in trade on the back of this news update. Tell us more on that.
Interesting, Hormaz, two teetotalers on a Thursday afternoon talking about Brandy and Tilaknagar Industries, up around 2% for their stock. Remember, yesterday as well, the stock was buzzing, pun unintended out here, but it's launched its first luxury brandy. It's called Monarch Legacy Edition. It's priced at around just under 7,000 rupees for a 750 ml bottle. Brandy, remember, is 20% of the overall alcobev market in India as per Euromonitor. The reason why luxury brandy the company has launched is because they're seeing a gap in luxury market for brandy itself. Brandy typically is consumed at a much lower price level as against, say, other spirits like gin, whiskey or the others. So the company is saying if it's a 20% market share in the overall alcobev market of the country, then it has to have some salience in the luxury market as well. So that's what they are expecting. But apart from that itself, they are expecting double-digit growth in the second half of this year. This year, they are expecting revenues of 16 to 1700 crores. Earlier, they were talking about 1300 crores. So they've, in a sense, upped the guidance. But for me, apart from the luxury market, what's most important to track is what the company does in Tamil Nadu. Why is that? Because it was only very recently that they entered Tamil Nadu. They have 5.5% share in Tamil Nadu at the end of first quarter, and at the end of the second quarter, it's come up to around 8.1%. What is so special about Tamil Nadu? It is 50% of India's brandy market. So you can't have India's largest brandy player not having a significant share in Tamil Nadu. The only concern is that 80% of the market is entry level. So premium brandy in Tamil Nadu isn't, as prevalent or as consumed. So that is something we'll have to track going forward itself. So with all these parameters, we spoke with the management. We posed the same questions to the management itself. Let's hear out the insight that came from it.
There were two reasons, in fact, for getting into the luxury segment. One was, of course, we felt that for us, it's a natural progression to move up the value chain in terms of having a luxury offering. And the second, more importantly, was that we do feel that there is a market to be addressed in this luxury category for brandy as well. We see that a lot of companies and a lot of brands are quite active in the luxury space in the whiskey category. So we do believe that there is a gap in the first half. I think it was low single-digit growth, and I think we've been over the reasons. I think there were elections there, and both national elections and state elections in Andhra Pradesh. But this half year, definitely, we'll end this half year. H2 looks at double-digit growth for sure. I think this year would be around same. I think our revenue guidance, if I'm not correct, it would be around 1,600, 1,700 crores for this financial year. Tamil Nadu is a very large brandy market. As you correctly pointed out, 50% of the brandy market is in Tamil Nadu. But let's also keep in mind that 80% of that market will be entry-level brandy in which we are not operating. So perhaps the addressable market for us is 20% of the entire Tamil Nadu market. So we have one product currently over there, which is Mansion House Reserve, which is growing quite well. But yes, we have a pipeline of products which we are looking at introducing in Tamil Nadu in the next 12 months. So of course, we'll have the flagship Mansion House introduced over there, and also the Flandy. The orange Flandy is something also which we will introduce in the next 12 months. So very optimistic in terms of Tamil Nadu. A large brandy market, predominantly, of course, cheap brandy, but good value proposition in terms of premium brandy as well.
The management there of Tilaknagar Industries, the stock still up over 2.5%, and over the last 5 years, the stock is up 2,000%. So teetotaler or not, if you had it in your portfolio for 5 years, that would definitely be on a
that would be quite a buzz. But they've turned around as well from a company that had peak debt of over 2,000 crores. Now it's become debt free as well. Things are turning around for them. So a lot of factors that led to this 2,000% up move that we've seen in the stock. So a big mover. Let's see where it goes from here, whether Tamil Nadu guys have expensive brandy or not.
We'll watch out for that. But time for a short break here on Halftime Report. On the other side, Fin Street, where Abhishek will talk us through the pain in the books of the lenders in the microfinance sector. Stay tuned. Welcome back. Time for our Fin Street segment, and Abhishek is standing by the wall to discuss the pain in the books of the microfinance lenders and how is the second half looking for them. Over to you, Abhishek.
In May of 2024, CNBC-TV18 had alerted viewers about the pain in the books of lenders in the microfinance sector. The pain is more evident in their numbers now and is expected to continue in the near term, or let's say next couple of quarters. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty. Lenders have seen their stock price correct from as low as 28% to as high as 60% in the last few months versus Nifty gain of nearly 5.5%. So from the data, one can clearly see decline in their growth rate, while asset quality has deteriorated, leading to rising credit cost. So credit cost for most of the players in the microfinance sector is generally on the higher side, given the fact that when their asset quality deteriorates, the recovery chances are really very low. So write-offs have to be on the higher side to make up for the same. AUM growth rate has declined for most of the lenders like Credit Access Grameen, Spandana Spurti, ESAF SFB, Satin Credit Care. Now, growth has been weak for lenders like Fusion Microfinance, Suryodaya Small Finance Bank, as well as Ujjivan Small Finance Bank. Asset quality continued to deteriorate for last 4 quarters in a row. The pain is expected to continue. Hence, NPAs have not yet bottomed out. Asset quality has deteriorated the highest for Fusion Microfinance, Spandana Spurti, Utkarsh Small Finance Bank, and even the best lender, Credit Access Grameen, has seen its gross NPA nearly double in H1 FY25 over FY24 numbers. Slippages were massive for lenders in H1 FY25. Some of the lenders have already made higher write-offs, which has impacted their provisions, but kept a bit of control in the deterioration of their asset quality. Return ratios have depleted for most of the lenders, while some of them, like Fusion Microfinance, have reported net loss for 2 quarters in a row. Now, analysts and management do say that asset quality will see further pain in the near future, at least for next couple of quarters. Hence, you can expect credit costs to remain elevated for most of the players in this segment. Credit cost is generally high in the events of defaults, given the fact that recovery is on the lower side in this segment. Over-leveraging had been a great concern highlighted in May 24 by CNBC-TV18. Many lenders have now given details with respect to over-leveraging of their customers. You can expect the AUM growth rate to be under pressure for some of the lenders as over-leveraging of customer reduces. Stock price have seen underperformance with respect to benchmark indices. Earnings pressure could keep a tab on their valuations.
All right, Abhishek, thanks a lot for that. With that, we'll slip into a short break. Aditya Agarwal of Invest for Edu joins in with some trading strategies. We get you an update on all things F&O as well, even as Nifty is down 200 points.
It's never perfect. It takes a while to fully stabilize, but we're now a 300 aircraft, 30,000 group organization carrying 60 million people a year on more than 300 routes. And I think the team and all the supporting agencies like the DGCA and the ministry can take some pride that what takes airlines in other countries 5 to 8 years was done in India in a little over 2.
$200 points down on the Nifty. It's been a volatile November, and as a result of which the volatile expiry day as well, the intraday chart of the Nifty comes up for you, and you see that it's been fairly volatile post 10, and thereafter we have seen any recovery which has been sold into itself. November series, the high was 24,531, the low was 23,263, a 1,200 point range is what we saw. Today, the key draggers have been Nifty IT, even though the Nifty Bank has actually been an outperformer. HDFC Bank has dragged the frontline index a little more. We'll just keep an eye out on crude and gold, like we've been pointing out. If there is any sort of global related tension, then these two will be the first to react. For the Nifty this afternoon for expiry, the range that is being played out. One, the 24,200 put writers have been caught on the wrong side. That explains the accelerated decline on the downside. 24,100 put writers are still active, and they have a premium for almost 98, 99 odd rupees, telling you 24,000 will be a support for the frontline index. So if the Nifty has to bounce back, it has to bounce back from 24,000 levels itself. But on the way up, 24,150, 24,175 will continue to see some selling. That's explained by the 24,100 call writing that we've seen. For the Nifty Bank, the range is a lot more well defined. 52,000 at the lower level. That put is extremely active. And on the way up, 52,500 itself. Nifty Bank somewhere in the middle of that.
Important levels to watch out for in the final few minutes, and we'll ask those to Aditya Agarwal, the Head of Research and Investments at Invest for Edu, who's joining us on the show now. Aditya, good afternoon. Thank you for joining in. Where does the Nifty head now in the final few minutes of this monthly expiry session? Does 24,000 hold? And if it doesn't, where does it go? And couple that up with your stock-specific recommendations for the afternoon as well.
Good afternoon. Thanks for having me on the show. So I think markets had to give up some bit of its gain after a decent up move. We're just witnessing a bit of a consolidation, I would say. 20 DMA is something that I'll be watching out very closely, and that happens to be at 24,000 mark for the Nifty. I think if 24,000 is held, we will see again a kind of a pullback rally in the market, maybe tomorrow or next week. It's more of an expiry move that we're witnessing on the Nifty, I would say. So I'm not too much concerned or perturbed about the fact that the Nifty is down 200 points, though it was a sudden fall. But I would not read much into it. Rather, closer to about 24,000, I would look to buy the market with a stop loss close to about 23,900 and look for a target of 24,400, 24,500 again. Same holds true for the Bank Nifty, as Mangan pointed out. 52,000 happens to be a very strong support here for the Bank Nifty. And an outperformance here we will see from the Bank Nifty, especially the PSU lot, I think will outperform going ahead.
All right.
Talking
And,
about
stocks.
Yeah,
Go ahead, stocks. That's all we wanted.
So I've got a couple of buy Pankaj. One is the BHEL stocks looks extremely attractive to me after a decent correction, has taken support at the previous peak and now is bouncing back. So I think it's an excellent buy at current levels for a target of 270 on the upside and a stop loss on the downside at 240. So BHEL is looking attractive to me. The second is LIC Housing Finance. This entire segment is looking good. The NBFCs, the housing finance companies, and the insurance companies. So I've picked up LIC Housing Finance. It has broken out from a narrow consolidation phase, and I think at current levels offers an excellent risk to reward as well. So for a target of 665, I would look to go long on LIC Housing Finance with a stop loss at 615 on the downside.
All right, Aditya, thank you so much for sparing time and joining us on the show with your views on the index and specific stocks as well. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be back.
And going down the phone route?
No, I don't think.
No?
We're happy with this
So
space.
that's a Lakshman Rekha.
There is no to anything and not easy yes to everything.
What was that like for you? I mean, getting a Virat Kohli, for instance, on board.
Who's the right fit for the brand? Who is that noise maker who makes the noise in his own field? Who is fitness freak? Who can influence the customer?
He was Bhaiya and you were the young boy who was following him around.
When I was getting married, he was dating, for an example. When I was having kids, he was thinking of getting married.
Do you miss aviation at all?
Not miss that much, but yeah, I try and keep my license renewed.
So,
that I've been able to manage.
you've been managing to log in the hours to renew it?
Fortunately, this business allows me to spend that money extra on keeping my license renewed.
License renewed.
Maybe he has in his back of mind that he might need to go back there.
Go back at some
Yeah,
point,
that's a backup
is it?
plan.
Welcome back. Now on to a CNBC-TV18 exclusive. Titan's Helios has formally launched the Swiss luxury watch brand Chariol in India. Shilpa Ranipeta spoke to the CEO of the watches and wearables division at Titan, Suparna Mitra, and began by asking her as to how the watch caters to the luxury premium segment. Listen in.
Right now, we have limited distribution, and it should be. Like you said, it's a very high-end watch. We have more than 250 Helios stores. Right now, we are looking at we've already placed Chariol in about 9 or 10 stores. We're not planning to expand in too many stores. Yes, analog watches continue to do well. Premium is a very big growth lever. I would also say the other growth lever is fashion. And I think in brands like Fast Track and Sonata, fashion is really, making the consumer. The fact that we bring in trending fashion in our watches is bringing in a lot of excitement.
Finally, in closing, I wanted to sort of understand, we've seen a slight slowdown overall in urban discretionary demand. I think every consumer company has sort of seen that impact in the quarter that went by. How are things for the watches division, and, how do you see it performing for Titan overall over the next fiscal? I think roughly it contributes about 10% now to revenues. Where do you see that number going in the medium term?
So we grew by 19% in net sales revenue in quarter 2, which was the last quarter. We've had a really good Diwali season, so we're hopeful of doing good growth numbers in quarter 3. There are also a lot of weddings, which all of India is betting on. So we are very optimistic about keeping that kind of double-digit growth for the next few quarters. I think, yes, there are pockets where there is certainly a slowdown. I think we are also kind of lucky in the sense that we cater to upper middle and upper classes of consumers. Certainly the kind of consumers that come into a Helios, that will buy a Chariol, they're all kind of immune to that economic pressure.
All right, with that, we'll sit into a short break. On the other side, we'll get you another exclusive conversation lined up with M&M's Rajesh Jejurikar. Stay with us. Welcome back. Now the market's decline is accelerating. It's down 262 points. 24,000 is on the verge of give as well. And the stocks that are declining are, the same old which were dragging the market lower. But now we have the Nifty Bank joining in as well. So it's the IT pack, Nifty Bank, and alongside that, a couple of these consumer names as well. Case in point, something like Titan, etc., are all down. Adani Group stocks too, which were doing extremely well in the first hour of trade, have now given up from the highs, are currently at the lower end of today's trading session. So we'll just keep an eye out on all these stocks and the market itself. 24,000 is on the verge of give. As we track the markets, also keep an eye out on a couple of corporate developments. M&M has unveiled its first two electric origin models, marking its entry into the electric SUV segment. Our colleagues caught up with Rajesh Jejurikar, who is the ED and CEO of the company's auto and farm sector at M&M, started speaking about the new launches and basically get a look into the overall business itself. The stock at the low point of trade in line with the market. Hear out this conversation even as we keep tracking the markets itself.
That's a paradigm that EV companies are not profitable. I think if you do EVs right, manage your cost structures well, EVs will make money. What we've said on this is the percentage margin on EVs is going to be definitely lower because the denominator is different because of taxation differences. But on a steady state, once we get out of the launch phase or a period of, in a short run, we should have unit margins the same at an operating margin level.
All right. So if you were to ask about profitability in how many months, how many years?
That's something, Parishit, we'll have to wait a little bit for. But we've demonstrated a track record of showing very good performance. Our margins in our auto business, over the 3-year period have gone up really, really well, and we have the best peer margin.
Okay. Now, to ask you about how much you've really invested in putting these products together.
So these two products, so we've shared. Firstly, I'll just step back and say what's the total EV investment that we've already announced. So F22 to F24 cycle, which got over, we had said we had spent about 4,000 crores on EVs. We announced that for the F25 to F27 cycle, we've announced 12,000 crores. So we have an overall EV investment of about 16,000 crores. The allocated amount from that towards these two products, which includes the development of the platform, the powertrain, the tech, and the capacity, is 4,500 crores.
Okay. Now, in terms of raising more funding, there have been talks that the Mahindra Group has been having to raise funding for your next round of development for electric vehicles. You seem well capitalized right now, but what's the amount that you would possibly need for future? How much are you looking to raise?
At this point of time, we're not really into going to external investors for more funding. We're generating a good amount of cash in our auto business, as you know. As an M&M Limited, we have 19,000 crores, as a cash balance at the end of the last quarter. So at this stage, we feel very comfortable financing all the investments that are needed for doing what we have to.
So what is the level of local engineering and domestic content in these vehicles and compared to the import content?
So we are in the process of preparing our PLI applications, which need to answer the question which you're specifically asking. We will, because the calculation of that is a function of the multiple tiers from our suppliers. So you need all the data coming in from suppliers of what is the end-to-end through all the tiers of local versus imported content. We're in the process of completing those applications, and over a period of time, we're sure we're going to meet the PLI. But we are in the process of preparing ourselves for that.
Right. So how many more EVs? A few years ago in the UK, you had showcased a pipeline. At the Bharat Expo next year, are we expecting some EVs to be showcased? What would
we'll show the same ones at Bharat Expo.
All right. Speaking about hybrids, considering that the market for hybrids is small, but there are many states in the country which are offering incentives or policy enablers for hybrids. Is that something running in your mind that we need to get hybrids on the road at some point?
It's not running in our mind right now, but if our customers do at some stage feel that they need a hybrid option from us, we'll be ready with it.
Okay, my final set of questions. I know you have a busy day ahead. There's been a lot of speculation about a possible joint venture with Skoda, Volkswagen, a 50-50 joint venture. There are so many reports doing the rounds. We'd like to hear from you on where things are and whether there is anything on the table.
I wish I had something different to say than what we've said in our stock exchange clarification on this, so we just stay with that statement.
Right. Right. But you have been looking out for these opportunities.
We've always said we talk to people and we're always open to conversations on partnerships, and we stay with that position.
Right. Any thoughts on a possible demerger of the auto, palm and
Absolutely
electric
not.
business?
Parikshit, enjoy the weather. We're here in a beautiful campus. Let's take a drive
Final
around.
question. You've got two EV brands.
Yeah.
What is the larger thinking behind them for the future?
There are two EV brands because, as we've said, the architecture, is going to be carrying the brand DNA. So the XEV carries over the brand DNA of a brand we already have. The B is a totally new design language, so that stands out as a separate brand. But if you were to bring a Scorpio electric, electric origin on the Scorpio brand, then it would carry the Scorpio name with a .e. So we would carry the identity of our existing brands where we bring them to electric, except B, which is a totally different brand.
The management of M&M speaking to Parikshit, 250 points down now on the Nifty. It's been a significant fall from the highs of the day. We'll continue to keep tracking the markets as the expiry draws to a close. 24,000 is what the bulls are fighting to defend as of now. Time for a short break. On the other side, Manisha Gupta joins in with Chirag Thakkar, the director at the Amrapali Group, for the Commodity Corner. Stay tuned.
Welcome back. Joining us on the show now is Chirag Thakkar. He's director at Amrapali Group. Chirag, hi, good to have you. And quite a bit of a slide is what we are seeing in silver prices, now trading below $30 an ounce, 100,000 rupees kg to 87,000. I mean, that's 13,000 rupees of a decline already coming in for prices. How are you reading it?
Very good afternoon, Manisha. So if you see last 20 days, it has been a pure roller coaster ride for all the financial markets of the global world, right? So we see a major election output coming in, and we have seen lots of other instruments making a huge moves into the market. So I believe that was a major region which has pulled back silver momentum. We have corrected from all-time highs to almost more than 10% down at these levels. I believe there are lots of uncertainties in the market. There are lots of major policies expected out in the market in the first month of the next year. So I think we are at an uncertain point, and we see that the market is actually reacting to it. So I think it's a sideways movement, and I think it's a stand hold movement where we could see more downfall coming down after yesterday's inflation data actually moved market very well below $30, which we didn't saw in last couple of months. So yeah, that is the move right now.
So Chirag, the markets, as you said, since the US elections have seen a decline coming in for silver, especially. There also is a belief that by the first quarter of 2025, by the time Trump is settled and we understand what kind of tariffs are coming in and all of that has been digested, until then it can be volatile. But what is your sense? Where is the support now coming in? And do you still believe, are you still in that category which thinks that a lakh rupees and perhaps a lakh plus kind of levels could come back in 2025?
See, Manisha, I see short-term to long-term, I'm still bullish because the ground reports, what we get at the physical level, the demand is still high at these levels. At the same time, I think 85,000 would be a bottom out. Come what may, that would be the level wherein ETFs, physical buying, global industrial demand comes in, and I'm sure it won't be able to break the 85,000 unless we see a major decisions to any other things coming in. So I think 85,000 is a bottom, and next year, to answer your question, next year we could see going it above 100,000 for the INR.
All right. Chirag, also other things that we are listening into the Indian markets is that the way hallmarking has come in for gold, it could come in for silver articles as well. And the way it was done for gold, there was a grace period given for conversions for the HUID. What are you listening into? I understand that the street is waiting for the notification to come in. How ready, prepared is the silver market for this?
See, if you see silver market down the line, if you see the whole value chain, it is not that as organized as the gold market, and it is a very welcome move because we have seen quite a time wherein when a customer goes back to sell the silver articles and silver ware, it is very tough for them to get the kind of the same valuation for what valuation they already bought. So I think it is going to be a hiccup when it starts, as we saw in the gold jewelry. But it is a very welcome move, and we are moving towards a whole value chain getting more organized, and it is a win situation for a customer.
All right, Chirag, thank you so much for sparing time and joining us this afternoon. Manisha, thank you for joining in as well. By the way, the Nifty bulls are still fighting to hold that 24,000 level on the downside. What's contributing to the fall, though, are stocks like Infosys. That's contributing almost 37 points now to the Nifty fall. Now 3.5% lower at the lowest point of the day is where Infosys lies, and most of the other index heavyweights too contributing to the fall, be it Reliance Industries, ICICI Bank, TCS, HDFC Bank, all of them contributing in double digits to the fall. There you can see on your screens there, and only a very few gainers on the upside. SBI, Tata Motors, very negligible contributions. There are 46 stocks on the Nifty currently trading with losses as the bulls fight to defend 24,000 on expiry day. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.